We are here for another investor social this evening. My name is Natasha Phipps, and I am a real estate investor and an investor-focused realtor here in Calgary, Alberta. I'm joined tonight by most of my team. Not all of us are here. Alexander Sell, who was going to be presenting tonight, wasn't able to attend last minute. So I'm going to be stepping in for her for that portion. But we are, real estate investors and investor-focused realtors here in Calgary. And property managers now. So we're going to talk about property management a bit tonight as well, and an exciting announcement around that. So let's get started. I'm just going to go over quickly a little bit about what we're going to talk about tonight and what the evening looks like. We do have a special guest speaker tonight, which is very exciting. It's not just me talking this time. Catherine Young is here with us this evening. And we are very lucky to be joined by her and all her expertise. She's with 180 Law Group and is located here in Calgary. And she does work with a lot of investors, out of province investors, and I believe in British Columbia and Alberta, but I'll let her obviously talk about that. So first, we're going to give just a little market update about Calgary, what's going on. Then we're going to bring in our special guest speaker, Catherine. And then after that, I'm going to talk about kind of tying this all together a little bit, what's going on in the market, where the opportunities are right now that I'm seeing out there. And I do have a special opportunity announcement as well this evening. And then, of course, Q&A at the end, like we always do. So let's get started here. As always, we'd love to connect with you on our socials. Here's our Facebook group, Calgary Real Estate Investing. If you're not a part of that yet, of course, we would love to have you. Feel free to post questions, comments, ideas in there, news articles, whatever is interesting for the group. We want that as a hub of a place that we can all share our comments, concerns, questions, and opportunities as well. There's my Instagram there and our website, if you care to go check that out. So now Alex was supposed to be here giving us our market update, but as I said, she was unable to join us. So we will miss her expertise, but I'm going to briefly go over kind of what's going on in the market. I'm sure many of you are aware how the market is out there these days. And we're going to go over just the numbers briefly and what we're kind of seeing out in the market right now. So this is an overview from the March summary data that Alex was going to present upon. And it's no surprise that there is not any slowing down of this market. We can see a little bit in the months of inventory graph. We always talk about months of inventory a lot. If you don't know what months of inventory means, that just means that if no new listings came on the market today, this is how long it would take for the current inventory to get eaten up by the pace of the market. So it's my favorite statistic as like a quick kind of what's the market doing. And then also looking month over month, that will tell us which direction a particular sector of the market or even community, you can get really specific with this, which communities might be a little hotter than others. And so I really like this snapshot. And so as we can see, we did have two like baby rises in week over week months of inventory for detached and overall. Now these are very, very slight. We're talking about, 0.69 versus 0.73. But it is a red arrow, so it's important to mention. And as we've been talking about for months and months and months, the detached and semi-detached markets have really been where this fire has started. I'm not entirely surprised at all that the attached market now is actually seeing lower inventory than the detached market. I'm not sure if you were here for our last call, but we talked briefly about how when this marketplace is picking up, it starts in that kind of detached sector and starts to shrink in. So as people can't afford their detached home as an investment or a primary residence, they start shrinking down to something they can afford. So maybe they'll go to a semi-detached, then a townhouse, then an apartment, so on and so forth. So you can see kind of this will start to happen where the attached sector will become, just as popular, if not more than the detached, purely because of the rising costs and people cannot afford what they could afford previously. Same thing with apartments. I mean, it's no secret in Calgary that the apartment sector has been hit the hardest since 2015. And this is a very good number for the apartment sector for Calgary. First of all, we're in the green. We're less than 2 months of inventory, and less than 2 months of inventory is a seller's market in the apartment sector. So that has been, we haven't seen that in many, many years. So the last several months, we've been talking about this, how these trends are going to start trending towards the more multi-family properties, so townhouses and apartments. And so this is exactly on track with what we've been talking about and thought would happen. So very tight conditions. The summary here, sales activity hit new record highs for any given month. So it'll be interesting to see as we approach the spring markets here, how that kind of maintains. And the nice thing is, like I just mentioned, we're seeing gains across every property type. It's not just single family homes anymore. This is starting to trickle down, and the people who have been kind of waiting and being patient with their more multifamily properties, this is when it's going to start paying off. So if you have a townhouse to sell, let's say, you're going to be in a much better position this spring than you were last year, significantly different. And inventory levels obviously are still very well below average levels for March and continue to place significant pressure upwards. So we will continue to see rising prices due to the very low months of inventory that we just spoke about, and continued interest in the marketplace. Now, it'll be interesting to see how rising interest rates, of course, affect this. I think Alex might have put something about that on the next slide. But this is what we're dealing with right now. And if you're out in the market and you're shopping, it's probably frustrating. You're having to make many tries at it to be able to successfully get that property, seeing things like unconditional offers, multiple offer situations. And so this is exactly why that's happening. And if you do want to see the more in-depth data, as always, guys, we can send that to you, no problem. These reports can get very, very detailed if you want to see what's going on in a specific community or property type. In kind of other news that's really exciting, and if you've been following anything going on in Calgary, it seems like every 2 days there's some new business announcement, and the confidence is growing every single day. It feels like consumer confidence, business confidence, the confidence across the whole country and even the globe for Calgary is getting more and more exciting week after week. And so there's so many examples here, like Alex had listed quite a few here of really exciting opportunities in Calgary that are not necessarily energy focused only, which is the most important part of this boom, giving us some sort of stability. We have to have more than one leg in this house. We don't want to build another house of cards. So I'm really, really excited to see all the exciting businesses that are really staking their claim here in Calgary and taking advantage of the high vacancy rate downtown and making some really good deals when it comes to commercial office space. So, and then obviously we've talked about this many times before, but having the highest income, Calgary has the highest household income of any other major Canadian city. And that's why you're seeing floodgates of people coming to Calgary and Alberta right now. We have high wages and low cost of living. And even though our prices are increasing, obviously, as we just talked about, in comparison to where these people might be coming from, higher wages and a lower cost of living to what they're used to is really attracting people here right now. So it's really exciting to see. And we will move on now. So we can talk more about the market at the end. I didn't want to spend too much time on this because Catherine is our guest speaker here. So we're going to move on to Catherine. And if you guys want any more specific data, we can pull that up at the end here as well.
Wonderful.
Okay, so I'm going to find you, Catherine, and spotlight you. Just 1 minute. Do you have slides, Catherine?
Oh, sorry. No, you know what? I didn't make any slides. I have a sort of a template that we're working with, and then
Perfect.
If it's okay with you, I'll sort of highlight a section and then I ask for sort of questions while we go. Yeah. So a bit of a conversation because, I'm new to the group. I don't know, savviness of and the understanding of everyone in the group. So please feel free to interrupt at any moment. Anyone here, if a question comes up or just something you need further explanation on, I'm more than happy to do that. So
Perfect. Okay. Well, to start with, Catherine, why don't you kind of tell us about yourself and a little bit about your specialties, and let us get to know you a little bit.
Well, thank you. And thank you so much for having me. It's a real pleasure, and to meet everyone via a video conference, which seems to be the new way. And it's actually entirely how we practice law now, or I do anyway, at my firm. So I've been a lawyer since 2008. I was recently called to the bar in 2021. So just over a year now. Basically to take advantage of the real estate law that's happening in that province as well, because I mean, these are the hottest markets we've ever seen, I think, between at least Alberta and BC, and that's really the only places I can speak to with my experience. But it just seemed that, I was giving up a lot of work for investors, people moving back and forth between provinces for personal reasons, whatever that may be. But so my practice, I went out on my own about 4 years ago, and have been doing real estate law for a long time before that. So now I'd say about 75% is real estate, and then sort of a natural outshooting of that is wills and estates, because I get a lot of questions around there. So we do a fair bit of work in those two areas as well. And as I said, we're actually set up entirely virtual, which COVID, as terrible as it's been, there have been some technological advances, at least in the practice of law, that we weren't allowed to take advantage of before, which the biggest ones were the remote video conferencing for signing certain documents, witnessing them over video conference, and swearing affidavits. So that's allowed a lot more flexibility and efficiency, and especially as far as clients are concerned, if they're buying in Alberta, they can stay in Vancouver while they're doing, the legal side of it. They're not going to come here or back and forth to do any of that. And so, as of before, that was not possible. It had to be in person. So if you were out of province, you'd get your legal documents to then pay another lawyer in that city you were in to go over them with you. So that's been a really nice, a nice change. So yeah,
and Catherine, sorry, just to ask one question on that. Is that here to stay now? Like, is that going to be the new normal? We think, like, they're not going to go back on that, are they? I get asked that a lot.
No, it's, there hasn't, there's been no official announcement, but in either province, but I would, from our perspective, the lawyers, word on the street, and when we're speaking with each other, I don't see it going away. I think a lot of lawyers have moved back into the office because, they have that quote unquote real estate that they're paying for, and moving their lawyers back in there.
Sure.
We were always set up remotely, so I didn't have an office to go back to. So this is what we were hoping for. It just happened 10 years before it was expected to. So I think it'll always be offered as an option.
Awesome.
And if that were to change, I think you'd have some pretty unhappy people, and no provinces have clawed it back. So I doubt that would happen. I really would doubt.
Yeah, that's obviously, it's so much easier for everybody. And a lot of our clients, looking to buy in Calgary, are in BC or Ontario. So it just makes it so much more convenient. So great. Awesome. Thank you.
Exactly. So that speaks to that. I mean, last year we had a pretty big year with, I think we did almost 500 deals last year at my firm, and I'm the lawyer, and I have two paralegals who do my work in, who support me in Alberta, and two in BC. And again, they're all remote. So it's a pretty slick and well-oiled system at this point. So, and yeah, we're looking forward, and I appreciate your market update, because we're seeing those numbers just start skyrocketing again. So it's pretty exciting. And as you quickly mentioned, yes, we deal with all types of clients, investors, whether it's their first or second or third property, maybe they're have a few in Alberta and are trying out BC. And again, it's just wonderful that I'm grateful that I can now offer those services and be useful to people who are transacting both, so that they're not running around finding different lawyers. And it's a little more streamlined, and there's some economies of scale there as well. So yeah, that's been great. So I guess the next thing I wanted to talk about is just that, buying out of province. Now, as I said, I practice in Alberta and BC. There's a couple of things that are different in BC that, again, I don't know the sophistication of everyone in this room, but that I certainly noticed when I started practicing there. And that first big thing you'd think about as an investor would be the property transfer tax, which we do not have in Alberta.
Yes.
And that sometimes even not even for investors, just a first-time homeowner in that province, which technically maybe we're all investors, even if we have one home, hoping that it gains some value over the years that we own it. But that can be a big hit for a lot of people. And it's sort of a sliding scale based on the price of the home. You know, the first one, 200,000 is at 1%, and then 2% on and onward. But, you know, it's a significant enough amount. I don't know that it deters people, but it's just as far as closing costs and your budget and that, which you're, you know, if you're doing your budgeting for your, you know, what sort of money you're expecting to make off this and what your closing costs are going to be, that always adds a big
Absolutely
cost to that. So,
and that is part of our pro forma that we use here. We do absolutely calculate everything, all the cash expenses that you're going to have between offer and closing. You got to be calculating that. So that's a really good point.
Yeah, exactly. So in the one, I don't know if we call it exciting, but it is big news in BC. They just announced that they've passed a bill to enact a cooling off period. And Natasha, is that something you're on the pulse with, or is that something that?
Yeah. So, I mean, obviously I'm not licensed in BC, but the cooling off period, particularly when in pre-construction, is really where this is really critical. And even in the competing offer situation, it's not mandatory in the competing offer situation on resale properties, but in Alberta, I believe it is required for condominiums. As far as I understand, they have to give you some sort of cooling off period, which is a huge advantage.
Well, yeah, so it can and it can't be. So in BC, they've just announced it always applied to pre-construction, yes, but in BC, they've just announced it's going to apply across the board.
Everything. Oh, wow. No, I did not know that.
Yeah, so the laws, it's just the bill has been passed. So I think it'll be in the summer, sort of when they take effect. So, you know, there's a lot of talk about it. It's maybe too early to say until, you know, it's, I mean, of course, it's meant to protect buyers in such hot markets where, you know, they don't even know what they're potentially signing, you know, before they've done the deal, because they're worried about missing out on the opportunity. So they may have not seen strata documents, disclosure,
right,
anything like that. So it is intended to protect the buyer and give them basically from a firm deal. And we don't know the time period for the condo pre-construction is 7 days. So maybe it'll be 7 days as well. We don't know yet.
Okay.
But it basically gives the buyer the opportunity to walk away with zero explanation within that certain time period. So again, it sounds like there are pros and cons to buyers and sellers, but it is something people need to be aware of, especially, you know, as an investor, if you're selling a property, trying to buy another one, and that's the money you're using.
Yeah.
You know, and what it logically makes sense is like this cascading rescission of, well, I can't, this deal, you know, they walked away, I'm going to have to walk away from this. The buyer here is walking away, where, you know, where does it stop? Right. So that's definitely a concern that a lot of people have. So one thing to be aware of and just be mindful of, you know, for people looking at maybe buying in the summer or the fall as this starts and seeing actually how it works. So that.
Good heads up on that.
Yeah. And then I guess my sort of last subject I wanted to discuss was sort of tips for avoiding, you know, maybe the most common pitfalls, and as investors, or again, just it really can't apply to most buyers.
Yeah.
But where tax implications are involved, different financing options, and different laws, depending on how you're using this property. So always important to hire the right people, before making such a huge investment. Obviously, your realtors, your real estate lawyer, your accountant, you may require a tax lawyer, your financial planner, your property inspector, and your property manager potentially. And these are all the people who will help you avoid those pitfalls. And whether it's your financial planner, your real estate lawyer, the actual financing piece, if you're going to be getting financing for the property, you can always go the traditional bank route. You've got private mortgage options. And then we have the vendor take back option or concept, and then a lease or rent to own type option. So
You can help with all of those, Catherine.
yeah, we do all sorts of mortgages just like that. Yeah. And depending on, a vendor take back can be really useful for an investor if they're paying a big capital gain when they sell the property. So basically they're giving a mortgage to the new buyer, which would usually be second in line to another mortgage, which would help the buyer pay the down payment. But then, maybe it's a quarter of the purchase price, so that the buyer will use that for the down payment. And then the vendor is actually, it's easing a bit of that pressure from any capital gain they might be paying, earning a typically much higher interest rate, and getting a bit of money there. Or the lease to rent to own option, where you have a renter come in and you offer them, 5-year lease with an option to buy at this price at that time, which depending on the market conditions, I don't think we're in that kind of market right now, but it's certainly an option that, and the lawyers will help you draft that, because those are very important contracts that
Yes.
have a lot riding on them. So that was what I was going to say about that. Otherwise, of course, you're doing your due diligence on your, if this is a rental property, the financials there. A big thing too is what is going to happen to the rent if there are renters in the property that you're buying. What happens to them? And there are big time legal implications there. And we can't just ask them to leave kindly on the day. As far as BC and Alberta have different laws. Bylaws, of course, if you're buying in a strata or condo, are you allowed to rent it? Are you allowed to rent it for a certain number of nights? And it must be owner occupied on other nights, or does it allow short-term rentals, long-term? What does that look like? And then also any non-resident non-Canadian resident tax implications if there are people looking from outside, or if you're an investor, you're selling and you're moving, you technically are, maybe you're moving to the States or something, that, the clearances we need before, you can collect your full cash once you've sold a property, just ensuring that you are still a resident of Canada, because of course the CRA, if there's anything owing, the CRA is always going to be the first person to get paid. So there's that. That's.
I was also wondering about real property reports. Given as soon as the market starts speeding up, people often, they just ask less questions, of course, and people tend to be less prepared and less organized. Can you just talk briefly, like if you've never bought a house before, you maybe haven't even considered a real property report, but I find almost everyone I talk to when I go to sell their house forgets they even have a real property report. And so it's really important that you get that ahead of time. But can you just talk briefly about what what's important about a real property report and what you need to be aware of?
Yeah, they're incredibly important. So and they work differently in Alberta and BC. And BC, we don't, the standard contract does not require a real property report. You will get title insurance in lieu. So it actually works well there. But in Alberta, section 10.2 of your area contract sets out that you are to be, the sellers agreed to provide you with a current and compliant RPR. And it's been a real struggle for lawyers. There's been a lot of conversation about this because they're an incredibly important document. And if we get them a day before closing and they're, red flags all over them, it makes our job really difficult. And so my advice in that sense, get for anyone looking at buying, get that as soon as you can. For realtors too, like it's the first thing on a bare land condo or, standalone home with land that we should be asking for. It really is, because we will contemplate holdbacks, but it just gets pretty messy at that point. So current and compliant means no encroachments. Basically, so once you submit to the city, if the surveyor's flagged any encroachments, whether it's with the neighbor, we'll have to get encroachment with the neighbor, or whether it's with the city, we apply to the city to do that. And normally everything works out, but when it doesn't, what we're worried about is potentially, a deck that wasn't permitted that needs to be ripped down, a retaining wall that needs to be put in or adjusted that wasn't done properly, something like that. And then there are things that can actually get very costly. So the best advice as a buyer or seller, make sure you as a seller, have it ready. As a buyer, be asking for it. And because and never, ever, unless you're buying a foreclosure, you wouldn't accept ever to change that contract, to not accept one.
Yeah, I see people doing that. Like, oh, I've got a hot listing. I'm just gonna, and my seller doesn't want to pay the fee to update it or get one period. So we're just gonna like strike that out. And that's always terrifying. And a real property report is essentially like a little map of your lot that shows your boundary lines, where the buildings are in relation to the lot lines. And as you were mentioning, there's certain setbacks that you have to be in compliance with the city of Calgary. And then people will also say, maybe you could talk quickly about this, is, well, we'll just give you title insurance, therefore you don't need to worry about it. So can you tell us what title insurance actually does, and why that's not necessarily just a Band-Aid?
Right. So, well, number one, most banks will require a real property report. So yeah, it is a survey done by an engineer. You see them out with their lines and lights and things doing that. So, so basically, so again, in BC, they do accept title insurance, and it's sort of an American concept. Title insurance protects the integrity of your title for as long as you own the house or until you refinance. That can be things, if there are things wrong with the real property report that you were not aware of at the time of purchase, then that would cover that. And for instance, like a big one, like a retaining wall, if that had to be put in, that would not be a cheap endeavor. And then anything actually in the home, like if there was something not permitted and you had to rip out all the electrical, they would cover that. And they also cover instances of fraud, which depending on your risk tolerance, but should someone refinance or sell your house out from under you, pretending they were you, they would recoup the costs for that. Now, you're seeing a lot of days lenders, we call them the B lenders. So they're not, they're great lenders. They offer great products, but they're not the major 6 banks. So they will often require it because it also protects their mortgage. So if the house, they lent it based on certain parameters, and the house is significantly devalued, that will protect their mortgage and making sure that mortgage gets paid out. What else can I say? So when the banks require it, we don't have a choice. We buy it for the client. It's depending on the house, the purchase price, it say somewhere between 2, and if you had a house over $1 million, probably over $500, and you only pay it once. You don't pay it every year. So so it can be useful. And you know what, at this point, I do recommend anyone who's buying a used single family dwelling that they get it, because for what it's worth, it's not that expensive. And if again, the survey, so even if the survey actually was wrong, like the surveyors did it incorrectly, when you go to resurvey it, that will cover that. So, and again, the problem with a seller wanting just to dump this, well, not dump, but hot market, want to sell this, scratch it out, what is it worth? $800. Well, it's only worth $800 unless there's a problem with it. And the problem with accepting that is down the road when you go to sell it, and most likely that person won't accept title insurance in lieu, you're going to end up holding the bag if there is a significant problem. So the rules
that happened once. I had that happen with one of my sellers, and their garage was literally like several feet into the neighbor's yard, and it
And
was a huge
what I,
problem.
what I find is the people trying to scratch it out are the people who know darn well there's something wrong. So that's a real red flag when someone isn't going to spend the money.
That's right.
And you know,
Agreed. I totally agree. And when I'm working with another realtor and they're really being really pushy about this, I just advise we'll find another property, because I just think the risk is too high. Especially with that experience, that garage actually had to be torn down.
Yeah. Yeah.
And it had to be moved. So yes,
title insurance would have covered something like that if that buyer,
if they had done it. Yeah.
Yeah, exactly. So yeah.
Okay. And now I do want to touch on briefly, there's people asking obviously how they can work with you and how you can help, but I wanted to also highlight that you are like you're a mobile type of service, right? So can you tell us about, if I want to work with you, like what your process is, how do we get a hold of you? We can put that in the chat, but I think that's really important too.
So yeah, we offer, so most of our business now that we're doing and interaction with clients, it is over Zoom. But we are absolutely more than happy. I'm happy to sit down with someone who may not be comfortable with that platform or wants an initial meeting. From my experience, investors are usually very busy people. So
Yes.
if they can just be at their desk and I'm at my desk and we're having a great discussion, then all they have to do is print a few pieces of paper. So what happens, either on a buy, sell, refi, anything, we collect all our information from the client, the realtors, the banks, via email, phone, anyway, prepare your file. And then the big difference is the signing meeting then would be over video conference. So we have, and it depends in BC and Alberta, a little bit different, but packages that you can sign electronically, those are all my internal sort of due diligence documents. And in both provinces, there's a package that requires original signatures, and those will be mortgages and transfers, because those go to the land titles offices and they require a wet ink signature. In BC, you can scan them to me back. In Alberta, I need those originals. So we just arrange for a courier to pick them up and drop them off to me.
So easy.
It's a breeze.
So nice.
So I'll add my
put your info in the chat there. And
this is my cell phone number. You can text or call me anytime. We are also very flexible with our work hours, as we do have kind of a non-traditional model. So, a lot of people are busy. They're working in the day. So I'm available in the evenings for appointments. Depending on the situation, but with some notice in that, we can always coordinate a bit of flexibility there for people who are all also very busy and working. So, and yeah, awesome. If anyone just wants to chat and ask a few more questions, I'll reach out anytime.
Great. Thank you so much, Catherine. I also noticed when I was looking on your website, you have some written work there too. Like you had a article about vendor take back. So there's some resources there on Catherine's website too.
There's lots of blog articles on there. If you want to follow us on Instagram too, we do a lot of social media stuff and blog posts that hopefully you'll find some valuable information. And if there is anything in there that triggers some questions, just feel free to reach out. And I do have to do my lawyer thing.
Oh yes, disclaimer.
No, I'm not under any retainer from any of you. My insurance wouldn't be covering this, but so none of this is to be construed as legal advice. But if you do require that, certainly give me a call.
Awesome. Thank you so much, Catherine.
Thank you, Natasha.
Well, thank you so much for coming. Guys, if you want to learn more about Catherine's services, go check out her website. And she has some incredible resources on her website too, but can help with the creative strategies. That was really why I wanted to introduce her as well to the group. We get asked all the time about creative strategies, and not every lawyer you pick up the phone and call is welcoming those types of clients. So I really appreciate you for being here, Catherine, and all your insights.
Thank you so much for having me. Such a pleasure.
Thank you. Okay, so now we are going to move on here to our next topic. I wanted to obviously we talked a little about what's going on in the market, and the really important thing for us as investors is obviously where's the opportunity, where where should we be looking if we want to take advantage of what's going on in the market? And I do want to talk briefly again about inner city versus suburbs, because this is happening in real time. The suburban market, like we've been talking about, if you've been listening to me talk for the last several years, I've been just hammering secondary suites in the suburbs, and they do still work. That strategy is not going anywhere. It's very tried and true. It's worked in Calgary's, ups and downs and everything in between, and it will continue to. But it is very, very competitive out there right now, and it can be difficult if you need to have financing conditions. You just can't compete, or you want to think a little bit more strategically, possibly. And what I've learned typically is the people who do really well is the ones that are trying to think ahead of what is actually going on today. And this is already happening. This is already coming in terms of the inner city is getting exciting again, the downtown as well, but also the inner city. And there is a lot more eyeballs on the suburbs right now than there is the inner city, but it is starting to shrink down to the inner city. So if you're someone who's looking for, you could combine secondary suites and inner city. There is, duplex to fourplex conversions inner city in nice communities like, west downtown, where you could take advantage of the new tenant profile that is going to be revitalizing our downtown core, which is young working professionals. Those are the people often you kind of want to be targeting and designing a rental property around. And so a duplex to fourplex conversion could be a great opportunity. Secondary suites, they work everywhere. It just comes down to the numbers and what you paid for it and what the rents are. We're going to talk a little bit about on the property management side, where and what the demand is for that, but I'll save that for our property manager to discuss. And then 3 and 4, condos and multifamily. So for years now, I've been saying, like, be careful of downtown and condos and the inner city. And that is starting to shift a little bit because of the heightened economic activity downtown. And as I mentioned, we're seeing positive appreciation in the last few months downtown for the very first time in six years or so, right? Like, we were in the red for a long time. And so if you want to get ahead of this wave, you want to be, a year or so ahead of this, you got to be looking where people are not. And there is a lot of inventory to get eaten up still in the downtown and inner city, but I absolutely feel extremely confident that what's happening in the suburbs is just going to start, squeezing downtown. So that's starting to get exciting again. And the reason we were cautious with this for the last however many years is not necessarily because there's not good buildings or units out there. It was because the vacancy rate was too high and the rents were too low. And so the price you were paying for these condos, or even townhouses, it wasn't high enough, or the price wasn't low enough to bring you any cash flow with what the rental rates were. So over the last several years, we've seen rising rental rates, of course, and this is starting to make sense now. Now, I would say that you're still gonna be a little bit at the beginning of this, which is really important from an appreciation standpoint, but be a little choosy on your tenants. There's a lot of newcomers to Calgary, and there's obviously a wide range of who these people are. So choose your tenants wisely, but I think it is a very exciting time once again for even redevelopment opportunities, building infills. My family and I built infills for many years in our city until that didn't make sense anymore, right? The market couldn't support it. We're at the time where this is starting to make sense again. And so if that's something that's of interest to you, I would be looking at that again now. And I know there is several in our group who are doing new build fourplexes, duplexes, infills. So that the time is now for that for sure. And I wanted to talk a little bit about, I do have a multifamily opportunity I've been working on for nearly 2 months now. In this regard, I get asked a lot, what am I focused on this year? What am I excited to put my time and energy into? And multifamily in Calgary is difficult because a lot of the buildings are older. A lot of them, the numbers aren't great right now because the rents have been low, like we talked about. And lenders care about money a building is making to determine a value. And if the rents are low, but what the seller wants or what they're willing to sell it for doesn't work, you end up putting down a pretty hefty down payment. And so that, combined with needing to renovate a lot of these units, can be a challenge. But if you're up for that, those opportunities are definitely there right now, as long as you're okay to kind of go through that stabilization period and do basically a longer term BRRRR on a multifamily unit. That time is here, in my opinion. So yeah, we're going to talk about this special multifamily project I've been working on. I'm excited to share it with you. It's kind of hot off the presses as well, even though I've been working on it for quite some time. But I do see a question about coach houses. Coach houses, I am a huge fan of coach houses. A coach house is a carriage house or a suite that goes above a garage. And oftentimes you see them in a detached garage in a backyard, then you have a apartment overhead. I actually was a part of building several of these a few years back, and I actually know the process very well. I know they rent beautifully, but they are significantly higher priced than what people think. I often see posts about, you think you're going to build one of these for 100 grand or 150 grand. And you have to realize you're building an entire house. Your existing garage sitting there with a big loft overhead, it does not work, because you need, unless it has a full foundation on it, which it probably doesn't. That, combined with tying into your utilities and everything, you're easily going to spend for a decent one of these like $250,000. I would say pretty easily. And so, but the numbers do work in terms of if you were to keep 20% in on a carriage house and rent it out, the numbers absolutely work. It's just you have to be okay for that kind of project. You can do them almost anywhere in the city in terms of where you're allowed to do them. The ones we built were actually far suburbs, deep south, in just regular residential communities, Mackenzie Town, Silverado. And yeah, they worked very well and they refinanced very well. So if you want to know more about that, just send me a message, Jed, and we can talk more about that further. Okay. So here is the building that I am talking about here. And this is in Mission. If you're familiar with Mission, it is in Southwest Calgary, inner city. And this is a 2-year-old building that has gone under a court-ordered sale. So it's a little complex due to the court-ordered sale nature. Given it's a court-ordered sale, it means when you show up in court, you have to be unconditional, money in hand, and financing approved, which on a commercial project is a little challenging. So I've been working on this deal for almost 2 months now, just to get all the legwork done and the business model made and all the documents. And because it's a court-ordered sale, it's not as simple as a regular sale. It's kind of, you got to pull everything out of them, as well as pay for a lot of your own homework and due diligence. So this particular property, we have an offer in on that's accepted. It's conditional at this stage. We are at the point now where our next step will be to remove conditions, and the court date is likely going to be beginning of May into mid-May. So it's coming up soon. I don't have time to go through the full business model of this tonight, just because that would take me probably half an hour. But I wanted to share this opportunity, kind of tell you why I'm excited about it. And if you want to learn more about it, we can have a private call or Zoom about this. So I want to talk a little bit about why Mission and why I really zeroed in on this community. With everything I talked about tonight, we were talking about what the market is doing, and the market is shrinking into downtown. The inner city is exciting once again. The vibrancy is coming back to our downtown, and we've been patiently waiting for this. What's great about Mission from an investor standpoint is 68% of the residents in Mission are renters. So predominantly a rental community, whereas Calgary on average is only 29%. So you have a much higher density of tenants here. So number one, that's great. And this building is fully rented and cash flowing, by the way. And that speaks to the good rental demand. And it's not like the last year or two has been amazing for inner city. And so the fact that they've had no vacancy speaks to how great this community is. Also, a lot of the buildings in and around the area are either older or as soon as the recession hit in 2015, they've kind of been let go a little bit. And so our goal with this is we have a beautiful brand new building that's going to attract excellent A tenants who are good working professionals in the inner city. The community itself is apartment dense. So 97% of the dwellings in Mission are apartments. And only 7% of those are built since 2011 or newer. So almost everything is old. Okay. So that's why this was so interesting and exciting. Cash flowing day one. We do not need to renovate, go through the BRRRR process. This thing will make money from day one for us. So that's another reason we're really excited about it, which of course helps with your financing. The banks are loving this. We are having no problem securing the bridge loan or CMHC financing on this. And we may even qualify for the brand new CMHC program, which brings this to 95% loan to value and a 50-year amortization period. If we get that. If we don't get that, this will still work at the traditional CMHC that we've been seeing for years to come. So this is a really rare find, to find something new, rented, cash flowing that we don't need to renovate. So as I said, cash flowing and fully leased. This is the building right here. You're probably wondering why it's a court ordered sale. Obviously, they don't have to tell me all that information. There was some sort of obviously dispute between the two parties, and they could not come to an agreement. And so it was sent to a court ordered sale. New construction and multifamily is obviously very hard to find. Given we've been in a recession, there hasn't been a lot of this type of projects going on. And those that have gone on, they're being held by whoever has built them. They're building them for their own portfolio. So they don't come to market very often. And then the modern and luxurious style of these will attract these tenants that we want, that are coming to Calgary right now for great opportunities. They have good jobs now downtown. They want to be close. This building is going to attract them. Mission, if you're not familiar, is right on 4th Street Southwest, which is bars, restaurants, coffee shops, spin studios, all of the cool things that young people coming to our city are going to want to live close to, combined with the river pathway system downtown and close to the Stampede grounds, the Saddle Dome as well, where the Saddle Dome is now. Lots of nightlife and entertainment around Mission. So I absolutely love Mission. They also have the Lilac Street Festival in the summer. It just has so much going for it. And if you drive around there right now, there is a lot happening. There's a lot of stimulus in the community right now from a commercial standpoint. So some of the best restaurants in Calgary are in Mission as well. So we need to raise $2.2 million total. That will be an equity raise that we will be offering here, and we're looking for a 5-year term. The funds we'll make them registered funds eligible if we get enough people interested that want to use their RSPs. This is already waiting in the wings. It's just if people don't want it or we don't need to use registered funds, then obviously we won't go down that road. But we have a limited partnership structure already set up and ready to go. The minimum investment per unit we're going to be looking at is $100,000. And the timeline, like I said, the court date it's a little bit up in the air. That's how court dates work. It will be hopefully mid-May is what I'm working with as a timeline right now. And like I said, if you're looking for registered funds, let us know, and we can kind of take stock of who's interested and how many units would be registered funds. So the closing date for this is likely to be 30 days or so after the court date. So if we get a mid-May court date, then we'll be looking at mid-June for a closing date. And Monique here in the chat just answered how many units, I think. Jed, yeah, absolutely. I'm going to put my obviously email up again. And if you're interested in this opportunity, you want more, send me an email with the subject line, The Bergen, and we'll get you everything in terms of the business plan, the summary. And then from there, if you're interested, the next steps would be next week, we'll have our subscription agreements available from our lawyer. and we'll be off to the races. So yeah, I'm pretty excited about this one. It's been, like I said, I've been working on this for a couple of months now, and I am excited about it. And I know it is a rare find. So we're determined to make this work. And there's one other essentially party possibly looking to buy this, but I have been informed that our whole group and team is really in the front running position here. So let me know if you're interested. My email is in the chat there. Daria just posted that email there. So send me an email if you want to see the package and everything like that, and I'll get you everything you need to know, guys. Okay. So we're going to switch gears again. We got a lot of different topics tonight, which is kind of fun. We are talking about property management now. We announced at the beginning of the year that we were going to start doing property management in-house. And the goal of that really was to give our clients a one-stop shop when it came to property management. And we're excited that we now have our full-time property manager, Una Allen, has joined us, and she's gonna talk as well. I'm gonna bring her on here right now. I'm going to spotlight you, Una. Or no, maybe someone already spotlighted you.
Hi.
There you are. Hi, Una.
Okay, excellent. Hi, can you see my video?
Yeah, I can see you. Sounds good. Oh,
Excellent. 'Cause I can't see me. I just see the slides and I see you. So
you're good. You're good.
hope
Yeah.
I look great.
Great. So yeah, I just want to introduce Una to the whole group here as our full-time property manager here at Phipps Real Estate Group. So we're very excited to have her. And she's going to give us just a little bit of an update of what is going on there out in the market, and what are tenants looking for? Like, what's the feeling out there out on the ground?
All right. So yeah, we're very excited that we launched our PM division. And the market has changed quite. It looks quite different from what it looked like 2 years ago or even 6 months ago. Yeah. So the rent rates have increased, and the reason for that is that as the market is changing in the sales division, the owners of units that were tenanted are coming out and selling their units, and they're pushing out all these tenants out on the street, and all these tenants are homeless, quickly looking to get into something. And so given that the demand has increased so much, so has then the rental rate. And so we've seen from a couple of years ago, probably about a 40% increase in rental rates. And from about 6 months ago, we're seeing about a 25% increase in rental rates in detached houses. Yes. And even on basement suites, as we were talking actually in one of our meetings this morning, 2-bedroom basement suites used to go for $850, $950 to maybe $1,100 if it was really well renovated. And today we're seeing $1,300, $1,400 asking for that. So that would be about 30 to 35% increase. So that is really major on the cash flow side for sure. Another thing that we're seeing is that the families that used to have maybe a father, mother, and let's say one child, at one point, even a year ago, they were able to afford a detached house with a bonus room and an extra guest room, and all of that sort of fit into their budget. But today, with the way the rental rates have increased so much, we're seeing that exact family move into a 2-bedroom basement apartment, or we're seeing them move. So that's changing for sure. 2 bedrooms before used to be rented by, let's say, a couple that needed an office or a couple that needed a guest room. And now we're seeing that being filled with families. So,
wow.
Yeah, so that's interesting. And also when it comes to people moving into Calgary, we're seeing a lot. About 30% of our inquiries now are people from Ontario, generally from Ontario, moving into Alberta. So we're seeing from all provinces, but mostly from Ontario. People are moving into Alberta. So we're having a lot of inquiries, and we did fill some of our units with newcomers. So we do have solutions for these types of tenants as well. We, because they do come with landlord references from different provinces, and they do come unemployed generally to this province. So there are solutions to that, and we work with these situations as well. So there is that. And I did want to mention to you all investors, Catherine Young mentioned something about when you're buying a property to sort of make sure that if you're buying a condominium, let's say these days, that to make sure from the building, particularly if what's the number of nights or what are the rental rules in that building. And we're seeing a lot of buildings change their rules from being available to, let's say, Airbnbs and these short-term rentals, to really constricting those rules down to maybe a minimum of a 30-day rental. So we're seeing buildings change these rules. So it's definitely something to keep in mind if that was the model that you were looking for to work with in the first place. And
that's a good point, Una. That's a good point, Una. And this is also another sign of our downtown and our dense buildings. Like, they can do that now, whereas several years ago it was just the owners really needed to be able to do whatever they could to rent and get some income out of these. So these tightening up of rules, really important thing to be looking up when you're buying.
Yes.
Yeah.
And 10 years ago, Airbnb and VRBO, it wasn't as popular as it is now.
Yeah.
So now everybody knows what it is, and buildings are kind of getting accustomed to what that means inside their building. It might be a lot more wear and tear on the amenities. And so they're getting a little more stringent about that. So another mention of, whether you do end up buying something in a property, in a building like that, let's say, where you're permitted to do something like that, I really want to draw landlords or owners' attention to insurance. Insurance is a major thing. As a landlord, you're usually going to get landlord insurance, and landlord insurances are usually set to accommodate a 12-month lease. So that is a major item that, when you get offered a 6-month lease or a 3-month lease by somebody, maybe it sounds like a long-term lease, but to an insurance company, it may not. So it's definitely something to ensure that you are insured properly if you take on, even if you have an unfurnished unit and you're looking at renting it out maybe longer than 1 month, or, you're going into that 3-month, 6-month period, but you still have to make sure that you're fully insured as a landlord for that lease. Because, like I said, I have some insurance, I have some investment properties under Milosh Monex, TD's Milosh Monex. They only look at 12-month leases, but we are looking as a property management company for solutions for our landlords where we can find companies that would insure long-term leases that are actually shorter. So 3 months, 6 months. So we are working on that right now, and hopefully by the next social, we'll have some solutions for that as well.
Great. Awesome. Thank you, Una.
Yeah.
Anything else? That was pretty informative. I think just maybe if people want to learn more about us, we do have on the Phipps Group website, phippsgroup.ca, we do have information about our property management services, but Una, maybe also put your phone number in the chat there, that and the PM email, so that people can reach out to you as well.
Yeah, I'll make sure to do that for sure. We do offer 2 types of services. My understanding is that most of our investors are the ones online right now are probably out of province. So what we really most of our properties currently, the first ones that had rolled into our launching are almost fully rented at this point. Out of probably 20 properties that we got at the beginning of last month, we have about 6 left, and those are all 1-bedroom units. So our 3 bedrooms are flying off the shelf. If I had 100 of these, I'd have them all rented. So I did want to add that as our property management service, given that all of our investors are out of province.
Not all of them, not all of them. There is
Sorry.
people here from Calgary. Yeah, for sure.
I made that mistake and right. Okay. So a lot of our investors are out of province, and so they do not fly in a possession to take keys and things like that. So what we do is we do take over their possession, and we also then take everything into our hands, from registering their appliances with the for warranties, to dealing with the builder for that first year of that warranty period on all the deficiencies within the unit. And so we really stay on top of those things. So your property would be in good hands when it comes to that. So
awesome. Thank you, Una. Well, thanks for joining us. We're happy to have you.
Thank you.
Jed asked, are most those units rented out as unfurnished or furnished?
Okay, that's a really good question. So our business is focused on unfurnished properties. And if you did need a contact for somebody that would do furnished property for you, we would be gladly forwarding you to another company that probably is more focused on the furnished units.
Yeah, exactly. And pet friendly is a big thing these days. I feel like a lot of our applications have pets.
I think it's a Calgary thing. I lived in Toronto as well prior to Calgary, and Toronto doesn't have many green spaces. So,
Yeah,
Toronto is really lacking the green space when it comes to, just having like these dog parks and things. In Alberta or Calgary alone, I don't know. There's an off-leash park. There's about 5 around my house.
Yeah.
Everybody has a pet here. It's a really pet-friendly city. So opening your doors to pets really will increase that chance of you getting a really good applicant in there. And then you just definitely don't want to close your doors to, like, saying no pets and then not having those applications come through, because sometimes it might be a really great application that comes through with maybe a tiny dog or maybe a couple of cats, or just somebody that's always been a great tenant somewhere else and that you might want to really look into having as your tenant.
Absolutely. Yeah. So really good summary there. 3 bedrooms in very high demand. 2-bedroom basement suites are in high demand. As you mentioned, people are having to kind of shrink their expectations a little bit based on rising rental rates. So when you're out there shopping, those are good considerations to have out in the marketplace. And we're only doing long-term rentals at this point. We are not managing short-term rentals, Airbnb, or anything like that. So good question, Jed. Thank you. Okay. So that was it for kind of the formal part of the evening. I'm already seeing so many emails come in about the Bergen. So I'm really excited to talk to people about that later on. But is there any questions people have? I'd love to hear them. Feel free if you want to turn your mic on or whatever. If you are not following us on our YouTube channel, we do have a YouTube channel. We do post all of our events live on there as well. So if you want to share this with someone, there'll be a recording up there by next week to the Calgary Real Estate Investing YouTube channel. And if you want to reach me to talk about anything that we talked about this evening, here's my email, my phone number, and our website where you can learn all about our team. So that's it for kind of the slideshow tonight. Just going to turn that off. See if there's any questions out there. Ian, how are you?
Doing great. Back to the very beginning when you were talking about the market stats. Do you have stats for acreages or that $1 million plus
Absolutely.
properties?
Yeah, absolutely. We can get that too. I'm not sure where, like, obviously it's broken up. The acreages are broken up by county. So we can do county, and then you can even zoom in even further from there as well. So if you want that data, we can certainly send you that.
And for the inner city data that they pull, does that include $1 million plus houses? Is that all price ranges, or is that just the median price range?
It depends what you put in. So in our data, like, we can kind of segregate it a little bit more than you can publicly. So if you wanted to like find out what, inner city sales between 1 million and 1.5, we could absolutely do that. The board, their data is often done by zones. So they have the, west zone, the east zone, the northwest zone, and that's how they break it up. And then they'll break it up by property type inside of that. So if you want to know northwest zone townhouses, they'll have a report for that kind of thing. Yeah, so we can absolutely provide that. Anything else? Anyone else have any other questions? We live by the 3 Ps: pets, parking, and perks. I love that. That's great, Jed. I mean, at the end of the day, like, that's such a good attitude. Our tenants are our customers, right? Our tenants are what is paying our debt off for us. So I think that's a really, really good way to look at it. And in Alberta, we're fortunate for things like pets that we can charge either a pet deposit or a monthly pet fee. You can choose one or the other. Whereas in British Columbia or Ontario, I don't think you can do that, but I'm obviously not licensed there. So
Can I just jump in for that one?
yeah.
Yeah, so the pet deposit is not allowed to be called that pet deposit
Pet fee.
here in Alberta. It is a pet
Fee.
fee, yeah. Pet
Yeah,
fee. It's a pet, non-refundable pet fee.
that's right. Exactly. Yeah, not a deposit. Sorry. For sure. Anything else? Anyone have any questions for Catherine? I think she's still here. Take advantage of Catherine's expertise if anyone has any questions.
Happy to answer, or send me a note privately, it's fine too.
Yeah, absolutely. Thanks, Darren. Catherine, Jed asked, do you offer assistance with wholesale closing deals?
Oh, well, you mean acting for like the agent, like setting up that sort of agreement that you would have? I mean, I would be acting for the buyer, the seller, but no, I actually never have done a wholesale where I was acting for an agent. I think it's, what do you call it?
I don't think they're agents. I think it's, the wholesaler getting a property under contract, and then they're essentially flipping their contract to a new buyer.
Right. Oh, yeah, I see what you're saying. Well, yeah, I guess I'm thinking of it the same way, but no, I haven't done those types of deals before. No.
Not quite your
No.
area of focus. Oh, this is a good question. Like, do you help people set up their new real estate business, like through incorporating?
Oh yeah.
You do corporate law as well?
Yeah, we can do corporate work for you and keep your books and stuff for sure. Yeah.
Awesome. That's a really great service. Correct. Okay. Yeah.
Mhm.
All righty. Anything else? In Ontario, purchasers of newly built condominiums have a 10-day cooling off period. Just want to know if Alberta has cooling off period as well for condominiums.
No. For a new build condo, there's no cooling off in Alberta.
No cooling off. I've never seen one without it, but like every deal we've ever done has it, but I think they're just offering it. Thanks, Jody.
I have a question.
Yes.
Hello.
Who's that?
It's
Michael. Hey, how are you?
Hey, good. I have a question for Catherine. Is there a time when it would be good to move, if or at all, move my real estate investments into a holding company? Like, is there like a number of properties that would be a good, maybe this is an accountant position question. I'm not too sure.
Yeah, that is a very good accountant question or a tax lawyer question.
Okay.
Yeah, I would, I would start with your accountant and see what they think. I mean, if you need a hold co, we can help you set that up. But no, I would definitely talk to your accountant. And if they think there are tax implications, then legal ones, then you'd speak to a tax lawyer.
Right. Okay. That was it.
Yeah.
As I was asking it, I thought, yeah, maybe this is more accountant, so.
Mhm.
It just depends if there's benefits, right, of incorporating and, what value, maybe it's limited liability, deferred taxes, things like that, where, I know where, like when the needle moves, what point does it actually make sense to pull the trigger on that? And bear in mind, it also costs money to run a corporation, a couple $1,000s a year for all the legal record keeping and accounting. So talk to your accountant.
Right, yeah, okay.
Yeah, that's the most common question I think probably accountants and probably lawyers get to is, should I incorporate and when? And the answer always is it depends, which is, I know, hard, but it really depends what you want. Like, are you building up a whole business here? Are you buying just one rental property from what I found? And then the tax implications, like that's different for everyone. So
if you
really
spend
need to
all your
get that
money,
tax.
if you're spending all your money in your corporation, you're getting taxed at the same as you would your personal tax rate. So basically, and again, I'm not giving advice, I just from my experience. So you need to look at your financials, your budgeting and how you're spending your money and how much you actually use per year. And again, what advantages would be had leaving it in the corp to defer those taxes.
Yeah, and another good thing to, if you're thinking about incorporating, is also speak to your mortgage broker. You really have to talk to the whole team because these are properties you already own, Michael. But if you were buying new ones or going to refinance and it's going into a new corporation, there could be different financing, hurdles potentially if it's a brand new holdco.
You're not talking about buying though in your corporate name, are you? Or are you talking about just moving?
He's talking about moving. Yeah. I believe, Michael, right?
Yeah, so yeah, I have a couple rental properties and want to still build the portfolio, so add some more property, and it's just something that I've thought about, should I move it and now, because I've also heard that it could potentially not really be an easy move going from owning the properties privately or personally to then moving it to a holding company. And so before I make the problem or the problem bigger by adding more properties, maybe take care of it now while it's just a couple properties and not like 5. So
Yeah.
but again, as I'm asking or as I'm bringing up the subject, I'm realizing it's more of an accounting question than it is a legal question.
Well, but then there may be, if you like setting I assume you're talking about setting up a trust to move, the beneficial interest of that property into your holdco. Is that correct?
Well, I don't know, actually. It's definitely something that the subject has come up, that there are benefits to, especially when there's multiple properties, to holding it in a corporation than it is personally, from a tax benefit. And what other benefits are there? I understand there's costs to having a corporation. I have my own business now that obviously incurs costs because it is incorporated and doing year end, etc. And so it wouldn't because it's an operating company, I wouldn't want to run the properties through that, but rather just a holding company. But what are the other benefits to holding it or putting these properties in a holding company? I don't know. So
speak to your accountant. You can talk to of course there's limited liability, or a more limited liability aspect to that as well. So but before you decide, I would talk to your accountant and a tax lawyer and see what they suggest for you. And it may change, the advice you get this year, maybe not this year, maybe next year, depending on what your portfolio looks like and timing of that. So
awesome.
So you mentioned limited liability. So what do you, what kind of liability concerns would I potentially have that I could avoid if I have them in a holding company?
Well, that's when we're getting a little too deep into the.
That's a whole
You're-
other webinar. Yeah.
Yeah, that's a whole nother event, Michael.
Yeah. Fair enough.
But it's a good
That's-
question. And
It's one of the reasons people go to a corp, right, is to reduce their personal liability and protect their personal assets against any sort of liability that might result from the income property or rental property or Airbnb or whatever it is, right?
Exactly.
Jed, did you have a question? Yes.
I did, yes.
Hey.
I was just writing them down. I just wanted to read them off.
Sure.
I had a couple of questions. The first question was, do you guys know what the net neutral amount would be to offset from taking your holdings from personal holdings to a corporate holdings? So Catherine, you had mentioned something about, a corporate holding should have to offset about $2,000 in filings or filing fees or something. And so I just wanted to know if either yourself, Natasha, Catherine, or even Una, if there's a generic rule of thumb of what that number would be to make it worthwhile for you to INC and or corp.
Well, that would be the number needed to move the needle, like the tax savings, and add sort of the corporate liability, like reducing your personal exposure that way. But there is what your account's going to figure out is where does that needle move enough that you're saving, there's enough benefit of incorporating for your tax purposes. And I don't know that number because I don't know what your portfolio looks like. So I don't think, other than, yes, they're being at least, saving you $2,000 because that's what you're going to spend to just run this corp. And then different strategies that your accountant could look at as far as and future planning. But I don't think there's a hard and fast number. It's just where, if you were holding this in your everything personally, what are you going to get taxed on versus in the corp? And how much money are you taking out of the corp? Because I know that if you take everything out, you're just getting taxed your personal interest rate anyway. So there is no benefit other than a more limited liability. But
I think it also depends how you draw it. If you draw it as dividend income or income out of the corp, the tax rate does change. But yeah, I also like your question about the Ocean's 11 team.
Yeah, that was my second question was,
Yeah.
like, is there a set template as a general rule of thumb? And of course, everyone's situations are very different depending on their portfolio numbers. But as a general rule of thumb, is there is there a list of the most ideal kind of team similar to that Ocean's 11 type of team, to where where you need a real estate agent, a lawyer, a tax advisor, a mortgage broker, an appraiser, a property manager, and what other team members can we add to that so that we can start the process of the journey, so that we can introduce and network and meet all of those people, and are there and I just brain dumped from after having 3 glasses of wine tonight. Are there any other team members that I'm kind of missing in that initial brain dump that you guys would recommend adding to that team? Yeah.
My personal answer to that is that if all of those people should be, first of all, investor focused as possible. A realtor that has never owned a rental property is not going to be the same qualified, as someone who's just been predominantly selling primary residence homes, right? They're just not going to have the same outlook, and their kind of lists of what should be needed and wanted in a sale for the client, basically what they're communicating would be very different. So my answer to that always is are they investor focused or investor specialized in any of these fields? even contractor, like Michael just mentioned, like the reason I like recommending Michael as a contractor is because I know that he owns rental properties and has built his own secondary suites. And so he knows that as an investor as well as a contractor. So that would probably be the only other thing I probably would have added to your list there. And then beyond that, it's your investor network, right?
Maybe an insurance broker too.
Yeah, insurance. Yeah, for sure. Oh yeah, that one wasn't on there. Yeah.
Okay,
Insurance.
yeah, awesome. See, and that, like, this whole webinar has just added value critically, because I don't have an insurance broker, and that's awesome. So other than the insurance broker as an added team member to this, to this most ideal Ocean's 11, I just kind of want, as an example, that's why I asked Una, do you also offer STR and or even MTR management as well? And Natasha, you had mentioned, you had addressed that, saying, yeah, we only do LTRs and so on. So is that another Ocean's 11 team member that I would need to add to my portfolio, to be able to have managed my STRs and my MTRs as well?
It depends. You may not be on the same, like, you want them locally, right? So if you're buying real estate in Toronto or obviously Calgary, you're going to have different people as well. So I would make sure that they are locally, are local experts. For something like short-term rentals, I mean, like, not everyone does short-term rentals, and so they're not looking for, a short-term property manager. But yeah, we only do long-term rentals right now at our team. We haven't gone down that road yet.
Well,
but yeah, that'd be a different person for sure.
And the reason why I'm asking these questions is, to me, like, money is money, right? Whether it comes STR, MTR, or LTR, and whoever is PMing or property managing, it doesn't matter to me whether it's property management rather than actual revenue management. So if the property manager deems it higher to be an increased revenue as an STR or even an LTR, that's where I'm asking as to whether or not I need to add that as another team member to have these units to be assigned, to have these units to either be allocated for LTRs for someone like Una to be able to manage, and or maybe Una 2.0 to be able to offset it with the MTRs and or STRs. Because for example, like the opportunity that you had presented, Natasha, today with the Bridgerton, my first question was, is that STR friendly zoning?
Yes,
For the Bridgerton property? Then if so,
yeah.
if I'm about to pay, if I'm about to bring my investment group to be able to just not do one, but all 21 units to have the financials and start that conversation, we want to know whether or not there's a local boots on the ground to be able to manage not just the LTR of it with Una, but maybe an Una 2.0 to do the STRs as well.
Well, and yeah, I mean, there's a whole bunch of layers there. Like, going all short-term rentals isn't necessarily a benefit when you're getting financing.
No, of course.
It's the whole team has to come together, right?
Yeah.
And it just, like, you need to have all those people. It just might be a little fluid based on the deal, right? And who is.
Can I add a little bit to that?
Yeah, sorry, the one thing I was going to add to that was a management agreement for like a short-term rental or a like long-term rental. You'll be agreeing to their services. You're not necessarily able to mishmash and overlap these two managers on the one project, if that makes sense. Like, if it's like a house with 3 bedrooms, you're not going to have your short-term manager and your long-term manager both under management agreements.
Well, because the other question too is that, like, let's say we do make the deal to where we have all 21 units under contract, and that entire 21 unit does close. Does that mean that we own? Does that mean that we are the strata?
There is no strata. And on the Bergen, it is not condominiumized. No.
Okay.
No, this is not a condo. This is a apartment building that we're buying. And no, for the Bergen, it's not set up like that. Like, this isn't, there's no voting rights. This is a passive investment that is secured via your subscription agreement, but is there to be as the equity partner in the deal, kind of like in a joint venture. If you had the working partner and a financial partner, it's kind of similar to that, but just on a bigger scale.
Thanks for the clarification.
Yeah, no problem. Good, really good questions.
Yeah, that was really interesting, actually. And regarding your short-term rental information for this city, I have a lot of experience doing it both in Toronto and Calgary. So it was our team's decision to not do furnished rentals and short-term rentals. But if you needed advice on something like that, you can definitely talk to me. You would be talking to the right person, and then I would direct you towards the right group that can help you with that for sure.
Thank you, guys.
Awesome.
Awesome.
Questions? Anything else, anybody? We're probably about time to wrap it up here, but if there is a couple more questions, I absolutely don't want to leave anyone wondering something. I am going to have on Monday evening a info session for the Bergen as well. So keep an eye out for that. Someone's not muted if you're on the phone, just FYI. So yeah, I think that's it. We'll kind of wrap it up there, guys, for this evening. Thank you so much for joining us, Catherine. I really appreciate all your expertise and chatting with us tonight.
Thanks for having me. Have a great evening, everyone.
Take care, everybody. Good to see you all. See you next month.